Pete, he made two big points here. One, we're only halfway through the tightening of financial conditions. And two, he thinks the economy is resilient enough that the Fed will have to take rates through 4%. Out of those 2 points, what do you agree with the most?
I guess on the economy, but I think we're not going to get anywhere close to 4% on hikes. I think long before November, the politicians are going to start realizing that a slower economy is far worse than any inflation pressure. I think the narrative out of DC is going to change. I think there's going to be political pressure, and everyone's going to talk about, wow, who cares about inflation if we start losing jobs, if spending starts going down, if GDP is decreasing, right? All you have to do is go back to Bush Sr. to see how important the economy is to get reelected. And I think that's going to be the narrative that shifts. And I think it's going to shift very rapidly, and they are going to regret their hikes, as early as August.
Is that the point that you want to buy this weakness? We're down 1.8% on the NASDAQ, down 1.9% on the S&P. You're seeing that classic race to the US dollar with euro dollar at 102.60. Is that the point at which you think some of this turns around, Pete?
Yeah, I would like to see maybe another 5 to 10% pullback. I'd really like to see some of these, high-flying ETFs like TQQQ, which is a triple leveraged QQQ, really see outflows. That to me would be the signal, okay, people have kind of given up and now is the time to step in and buy. I watch Eurodollar to maybe bottom. I like some of the calls that you were talking about earlier, whether it's 98, 95. And I think what's really happening is people are realizing Europe is in deep trouble. Europe is headed towards a recession. Once that gets priced in, then I think people start realizing, wow, how far behind is the U.S.? And that's when we start seeing a big reversal. That hopefully is kind of the washout that we need in U.S. equities to become a real buyer. Or we need some signal from the Fed that they are going to ease off on their both quantitative tightening and or rate hikes.
So, Pete, I just wonder, is it too early to see it in this earnings season if you're expecting some of this to really climax later in the summer?
I think it's probably too early to see in this earnings season, though I think you're going to start hearing a lot more about warnings, and you're going to hear about spending cuts. And it's the spending cuts that I think will be as important to triggering a wave of selling as it is going to be the earnings warnings.